Hello everyone, welcome to this channel. My name is Ruben, hope you're doing well, and today I want to talk about Square. What does the future of Square entail? Let's have a look at the business and conclude in the end with the opportunities and the risks. Square is growing two ecosystems, the seller ecosystem on the left and the Cash App on the right. Square is building a unique ecosystem of products and services. As sellers and individuals use more services, their activity with Square increases, reinforcing their recurring revenue model. It's basically a platform that consists of four components. The first one is managed payments, that has payments, so in person and online, hardware, risk management and disputes. The second component is POS plus the business tools. So Square has a point of sale system with customers for marketing, loyalty and gift cards. They can also do employee tracking and reporting, so that's like time management, and the e-commerce of course. That is called Square Online Store. The third component is vertical specific software that consists of services such as appointments, invoices and a virtual terminal. And then they have retail, that is called Square for Retail. And the last thing is Square for Restaurants, for food and drinks. The last component is financial services that provides access to funds such as the instant deposit and the Square card, payroll, and they also provide financing that's called Square loans. Square seller ecosystem represents a 85 billion plus opportunity in the United States alone. They split it up in four components. Transaction profit represents 39 billion, software 30 billion, Square Capital 12 billion, and financial services 5 billion. Zooming out, Square argues that they have a 100 billion plus opportunity with multiple vectors for future growth. For the medium term, it's all about new products and use cases that they want to release. Currently, there's like 16 billion in transaction profit in current international markets. And for the long term, it's all about entering these new markets and expanding further upmarket. The other opportunity for Square is not only servicing micro businesses, but also serving the larger sellers. The additional area of focus beyond micro consists of small and medium businesses and the mid-market segment. I personally think that the mid-market segment is definitely something that they should go after too, because they have 879k US sellers with an average seller size between 1 and 20 million. This represents a US gross sales opportunity of 3 trillion and one level higher, so the up mid-market segment. They have 43,000 US sellers with a seller size between 20 and 100 million, which represents a US gross sales opportunity of 1.3 trillion. To conclude, Square has a broad portfolio of seller products with multiple monetization levels. The first monetization level is transaction-based. That includes sidecar payments such as the POS app with payment usage only, the software and integration payments such as invoices, the virtual terminal, developer, Square for Retail, Restaurants, Appointments, and Square Online Store. The second monetization lever is subscription and services that focuses on team management, marketing, and loyalty from the software and integrated payments. Financial services that includes the Square card, instant transfer, and core flex loans from the capital. And the last monetization lever is hardware. Well, hardware includes the Square register, the terminal, the stand, contactless and chip reader, and the third-party peripherals. The second ecosystem from Square is called the Cash App. Square launched its Cash App service in 2013 to compete with services like Venmo, Apple Pay, and Google Pay. Peer-to-peer payment services allow consumers to use their smartphones to pay for goods and services, pay bills, and transfer money to friends and family. And Cash App has expanded its functionality beyond just a peer-to-peer payment service. Users can now also receive direct deposit payments and ACH payments. An ACH payment is a type of electronic bank-to-bank payment in the United States. And it's also possible now to buy Bitcoin cryptocurrencies through the platform. Most recently, Cash App introduced a new feature called Investing. And this product allows users to trade stocks commission-free within the application. And the goal of the Cash App is basically to become a super app in the future. The Cash App revenue model is split between the number of active customers multiplied by the revenue per customer. The active customers is determined by acquisition, retention, and winback, and revenue per customer that can be generated through product adoption, engagement, and monetization. In short, the Cash App ecosystem represents a 60 billion plus revenue opportunity in the United States, 20 billion for sending, The largest opportunity is in spending, which represents 41 billion, and the smallest part is investing of 2 billion. The Cash App also has multiple vectors for future growth. For the medium term, it's about releasing new products and use cases, and the long term is about entering new markets. Square has a broad portfolio of Cash App products with multiple monetization levels. The first monetization level is transaction-based and includes sending money peer-to-peer, such as instant deposit, cash for business, and credit card funding. The second monetization level is subscription and services. So here we add the spending money, such as boosts, rewards, stored balance, and direct deposit. And the revenue streams that fall under the spending money part are cash card interchange, cash card studio, ADM withdrawals, and interest income. And the last monetization level is Bitcoin, which falls under investing money, so we can buy and sell Bitcoin and also buy and sell stocks. Heading into 2022, Square is focused on several priorities by investing behind new and emerging product areas. First, enabling more commerce for their customers, including the recent launch of Cash App Pay and the potential future opportunities with Afterpay following the closing of the transaction. Second, providing more financial services by expanding their product set and unlocking new inflow channels in Cash App. And third, improving the health of their platform and promoting positive behavior by growing support and expanding access. And finally, as Jack mentioned during the conference call, they now also have emerging areas of growth that they are investing behind, and they will be tracking their progress against milestones over multiple years. These include Tidal, TBD, the hardware wallet, and Bitcoin mining, which they expect will in aggregate represent roughly 5% of their incremental step-up next year, or approximately $140 million in overall non-GAAP OPEX.
Hey, thanks guys. Nice trends. I just want to start off and kind of follow up on Tien-Tsin's question around Cash App a bit. Just given the impact of stimulus is likely running off a bit now, I think it's still impressive to see 2-year CAGRs at 104%. But just really love to hear what your view is on the drivers of incremental engagement per user, like sort of touching on the new capabilities and strategies from here on out for Cash App, really pre-Afterpay, along with the potential levels we'd be able to reach. Just thinking about what the potential engagement transaction levels, revenue per user, where that can go over the next couple of years. Thanks, guys.
Hey, Darren. Happy to take that one. I think it's instructive to look at where Cash App is focusing from a priority perspective, both in aggregate across the ecosystem as well as from a product development perspective to inform where we could see potential future growth. So as ever, as we head into the fourth quarter and into 2022, our strategic priorities remain strengthening our overall network, driving engagement, and attracting more inflows. And to advance these priorities, we'll continue investing behind product development, sales and marketing for customer acquisition, and support and operations, which underpins the entire platform. From a product development perspective, we're prioritizing a few longer-term focus areas, which I think really get to your question around how we drive long-term growth, ARPU, and lifetime value for our customers by ultimately driving greater utility for our customers. So first, from a commerce perspective, as you heard from Jack, we're at the beginning of building out a commerce platform for Cash App. You see that with Cash App Pay, you see that with Teams, you see that with what we're going to be doing in the future with Afterpay and other new experiences to drive greater utility and engagement. From a financial services perspective, we're expanding our banking capabilities, including new inflow channels into Cash App and exploring new products like Borrow to help drive engagement and attract more inflows into the network. From a health perspective, we're scaling support, we're expanding access, and we're doing this responsibly to encourage good behavior on our platform, which again further strengthens the network effects and the ability for people to bring funds in and use them across multiple products. And we're building out full stack teams dedicated to each of these areas in 2022. And you'll see that in our hiring plans in product development to drive continued product roadmap velocity. From a marketing perspective, we're investing to drive acquisition for new customers with a focus on reaching higher lifetime value customers and newer demographics. And as we've seen gross profit and lifetime value per customer grow historically, we've begun to increase our customer acquisition costs above the historical $5 range, which we believe is too efficient, given the opportunities that we see ahead. So some of the levers that go into that to drive investment in 2022 and future growth, paid marketing. This is where we can ramp our paid channels and is a growing portion of our spend. Referrals, which makes enhancements. We're going to make an enhancement to the overall referral program and use it as a way to cross-sell our ecosystem as well. And awareness, which grows the ability for people to come in and adopt products beyond peer-to-peer, and it includes reaching new types of customers beyond our existing demographics, and it advances Cash App's lifestyle brand as a true differentiator. And finally, support and the foundation on which our platform is built. The growth of Cash App has outpaced our investment, frankly, with customers adopting more and more products. And in 2022, we're going to grow our health team. We'll continue to build out our support and our infrastructure to align with Cash App's astounding growth. Part of that is deposits and limits, initiatives to reduce friction around inflow sources and add new inflow channels. And part of it is, some of the more recent things you've seen, like we recently launched in-app support messaging to all customers, and that's quickly become the majority of inquiries. We'll be dynamic with the spend. We'll track returns, but we're excited about these initiatives, strategic initiatives and investment areas to drive future growth for us, ultimately driving utility and engagement with the Cash App ecosystem.
On August 1st of 2021, Square announced its acquisition of Afterpay in an all-stock deal worth around $29 billion. Afterpay is a buy now, pay later service that resembles the same mission as Square. Afterpay will be an extension of both the sellers and Cash App ecosystem so that Square can leverage its bank charter to increase the lending power for businesses as well as consumers. The acquisition of Afterpay results in businesses being able to accept more transactions from consumers, as merchants won't be limited to accepting or declining credit based on one's FICO score. So Square will use Afterpay to extend its platform solutions both within the sellers and Cash App ecosystem to make commerce easy by using proprietary risk modeling to enable businesses or consumers access to buy now, pay later services. As a result, Square is developing a new financial system not based on credit scores. Buy now, pay later is better for both the consumers and merchants, as it allows consumers to pay for a purchase over time through interest-free installments rather than use cash or pay with a credit or debit card while still receiving rewards to encourage repayment. Not only does this remove the barriers for consumers to access funds, but it also better enables merchants to accept more sales. This is especially true for internet sales, as Afterpay's partners see on average a 20% increase in card conversion at checkout, more repeat buyers, and an increase in average order value. So in other words, buy now, pay later is a rapidly growing opportunity, a significant global opportunity within payments of 10 trillion and a current buy now, pay later penetration of 2%. By promoting the consumers as well as the merchants, this acquisition makes a lot of sense for Square's entire ecosystem. In the image on the left, the merchants on the flywheel represent the seller's ecosystem, while the consumers represent the Cash App. Afterpay's buy now, pay later solution is essential in connecting these ecosystems. On the right, you can see the active consumers and merchants that have been growing massively over time since June 2018, and Afterpay had in June 2021 98,000 active merchants and 16.2 million active consumers. Cash App and Afterpay combine complementary consumer ecosystems. It creates an opportunity to give Afterpay consumers access to the Cash App's broad suite of financial services products and introduces Afterpay merchants to Cash App's extensive consumer base. Looking at the differences between Afterpay and Cash App, while Afterpay has more than 16 million consumers, they are focused on the buy now, pay later segment. The consumer base consists of global, with millennial, Gen Z higher income, and they are located in the coastal of the United States. In terms of commerce, Afterpay has in-app shopping discovery, with $975 in average gross merchandise value per consumer as of the fiscal year in 2021. Regarding engagement, Afterpay has multiple purchases per month on average, with repeat buying. Looking at the Cash App, they have more than 70 million consumers. For the product, it's focused on P2P, banking, stocks, Bitcoin, and taxes. The consumer base is a little bit different. It's primarily in the United States, but they also have a millennial and Gen Z user base, and they're focused on the south and southeast of the United States. Regarding commerce, they have more than 10 million monthly cash card actives and a growing Boost Rewards platform. The last thing is engagement. Cash App has 18 transactions per month on average for monthly actives, up 40% year over year. It's all about integration of Cash App and Afterpay. Afterpay integrates into Cash App. Afterpay consumers will be able to manage their installments and repayments directly within the Cash App, helping to drive repeat engagement.
Thanks so much. I'd like to better understand your closed loop strategy with Afterpay. We've been following your BNPL pilot in Cash App, which appears to be defaulting payments to stored balances. Given your stored balances were around $2 billion at the end of 2020 and constantly being refilled, it seems that BNPL with Afterpay at Square sellers could generate significant transaction margin benefits. Can you help us better understand your closed loop strategy with Afterpay?
Sure, I can jump in on this one. I think what we're focused on ultimately is the product experience for our customers. And the commerce platform that we're building, which, this payment type enables us to drive things like in-app discovery within Cash. And as we've seen with Afterpay, that with their own app, they've been driving historically 1 million leads a day to some of their enterprise merchants. So when you think about beyond just the payment type that BNPL enables or even things like Cash App Pay enables, really the strategic imperative here for us is the commerce enablement that the integration of Afterpay enables for us with both Cash App and with our seller ecosystem. Of course, there will be opportunities to think about cost savings over time, but the strategic focus is on commerce and in-app discovery.
In the United States, digital wallet users are surpassing the number of deposit account holders at the largest financial institutions. ARK put this in a graph. On the x-axis we have time, and on the y-axis we have deposit accounts per annual active users in millions. The black line represents JP Morgan deposit accounts, the green line represents the Cash App, and the purple line represents Venmo. And Square's Cash App and PayPal's Venmo each amassed roughly 60 million active users organically in the last 7 and 10 years respectively. A milestone that took JP Morgan more than 30 years and 5 acquisitions to reach. At the end of 2020, the number of JP Morgan Chase deposit account holders totaled approximately 60 million, while Cash App's and Venmo's annual active users scaled to 59 and 69 million respectively. Digital wallets can acquire customers for a fraction of banks' customer acquisition costs. Well, you can also put that in a graph. On the x-axis you have a variety of financial products, and on the y-axis you have a range of customer acquisition costs. And the gist of it is as follows. For credit cards, bank retail checking accounts, the customer acquisition cost is relatively high, and for a digital wallet it's very low, and ARK estimated that with a value of $20. Even in 2019, Brett Winton was already very bullish on digital wallets.
Digital wallets. According to the research ARK has, the digital wallets should be able to upend traditional bank branches. But the question that we often get as pushback is, what exactly stops banks and the incumbents from just acquiring their own alternatives to these digital wallets?
Well, first of all, they're a little late. Like Venmo, if you count by number of deposit accounts controlled, Venmo and Square Cash are both top 6 banks in the US. Okay, so the Venmo's number 2. Square Cash is growing something like, we don't know exactly, but it's more than double year over year on the most recent data point. And so these banks, which are sitting on fixed assets, there's more than $100 billion in bank branch real estate. Each bank branch costs $1 million, and you have 7.5 employees assigned to it. When they build out a branch, they're basically pre-buying a set of customers. It's somewhere between $500 and $1,500 per customer acquired. So Square Cash and Venmo are acquiring customers at $20. So what's to stop them from acquiring those companies? Well, they'd have to pay a hefty price at this point. And then the go-to-markets for those kinds of companies have very strong network effects. I can't get off Venmo because that's what my babysitter accepts. So, I mean, it's like it's very difficult to unseat and displace kind of those network effect applications once they're in place. The JP Morgan shut down Fin, which was its digital bank targeted at millennials. Venmo or Square Cash has been #1 in the App Store in finance for basically continually over the last 3 months. I think Fin never cracked the top 250. So there's also just a bad a DNA mismatch where they're sitting there and saying, well, we can't profitably service these customers because our customer acquisition cost is too high. Whereas Venmo and Square Cash are saying, oh, we can get customers for $20. This is great. So I expect, all right, one more. I know I'm out of time. One more point. Okay, given the number of ATMs that are in the US, imagine that we each, instead of having the ATMs distributed around, we each proportionately took our own chunk of ATM and had it in our house. Then we would each in our house have a box like this big that would spit out cash to us. It's like 4 times the size of a phone. We just have phones. We're just going to have phones. Is the point. So I think, in a world where you have a bank branch in your pocket, why do you need $100 billion plus of bank branches on the streets? You don't.
Good afternoon. Thanks for taking my question. Jack, I want to follow up on your prepared remarks regarding Bitcoin. Are you looking to expand into crypto beyond Bitcoin, buy and sell, for example, buy and sell of other cryptocurrencies, and also enabling your users to kind of engage in DeFi and NFT ecosystems? Thank you.
We're not. Our focus is on helping Bitcoin to become the native currency for the internet. And we want to, we have a number of initiatives towards that goal. Cash App is just one. We're going to be building a hardware wallet. We're exploring Bitcoin mining, a consumer device to mine Bitcoin at home or in a business, or seller businesses, in fact. We believe, this focus is important. We believe it's right. And a lot of it has to do with the resilience, the fundamentals, the principles that Bitcoin offers. And we also want to make sure that we're giving back to the community as much as possible. And this is also reflected in our approaches for Bitcoin wallet, Bitcoin mining, and our new business unit called TBD, which is focused on building a developer platform to enable more ideas around decentralized finance on the Bitcoin stack and on that stability that it offers, and all the resilience that's had over the decade plus.
Square released a white paper detailing the protocol for a decentralized Bitcoin exchange. I won't go and alter the details in this video. In short, the TBDEX protocol facilitates decentralized networks of exchange between assets by providing a framework for establishing social trust, utilizing decentralized identity and verifiable credentials to establish the provenance of identity in the real world. In a post introducing the protocol, a TBD developer wrote that the TBDEX protocol aims to create ubiquitous and accessible on-ramps and off-ramps that allow the average individual to benefit from that crypto innovation. And TBD has published the white paper in GitHub so that the community can contribute. Square CEO Jack Dorsey, who is also the CEO of Twitter, announced the company's plan to create an open developer platform for a decentralized Bitcoin exchange back in August. He noted that TBD, Square's new division focused on developing non-custodial and decentralized financial services, would be building the exchange. The total net revenue for Square came in at $3.84 billion, compared to $3 billion in the last year. The revenues as well as the costs are rising organically, but Square is still making a positive gross profit. The transaction-based revenue came in at $1.3 billion. The subscription and services-based revenue came in at $695 million. Hardware revenue was the lowest with $37 million, and Bitcoin revenue came in at $1.15 billion. Looking at the costs, they had a total cost of revenue of $2.71 billion compared to $2.24 billion last year. Transaction-based cost was $754, so that segment is profitable because they made $1.3 billion. The subscription and services-based costs is the highest profitable segment for Square because they spent $132 million and made $695 there. The hardware cost, that is loss-making for Square, so they are basically giving their hardware for free. They spent 51 million here and only made 37. And the last segment is the Bitcoin revenue. That is a thin margin business because they made 1.815 billion and spent 1.77 billion. Taking the total net revenue and subtracting the total cost of revenue, we get a gross profit of 1.13 billion. Compare that to last year of 794 million. They have also operating expenses that are growing organically over time. They split it up in product development, sales and marketing, general and administrative, transaction and loan losses, and Bitcoin impairment losses. The total operating expenses came in at 1.11 billion. Compared to last year, they spent 745 million. Then we got operating income of 23 million. If you compare that to last year, that is lower because that was 49 million. But if you look at the 9 months ended and compare that year over year, Square is doing better because over these 9 months in this year, they had 215.7 million operating income. And last year that was minus 64 million. Adding and subtracting the other costs and expenses and profits, we got a net income attributable to common shareholders of only 84,000. Compare that again to last year, that is lower because last year it was 36 million. But again, if you look at the 9 months ended year over year, Square is still doing better because they had 243 million. And compare that to the last 9 months in 2020, they actually had a big net income loss of 81 million. The segment revenue for Square came in at $3.84 billion, split it up in Cash App, seller and corporate and other revenue. The transaction-based revenue was 1.3 billion, split between the Cash App and the seller ecosystem. Cash App was 103 million, the seller ecosystem was 1.19 billion. Looking at the subscription and services-based revenue, they had a total of 695 million. That consists of 3 components. The Cash App is 475 million, the seller ecosystem is 162 million, and corporate and other revenue was 57.65 million. Looking at the hardware revenue, that's only generated in the seller ecosystem of 37.25 million. And for the Bitcoin revenue, that is only generated in the Cash App of 1.815 billion. So how to interpret the numbers? Well, the majority of the money for the seller ecosystem is generated in the transactions and hardware segment. And for the Cash App, the most money is generated in the subscription and services segment and Bitcoin. Square is currently trading at $225 US with a market cap of 104 billion approximately, and they have a price to earnings ratio of 237.
Okay, so the first thing I'm interested in about Square, the revenue of 3.8 billion, and they did 1.8 from Bitcoin. This is a pretty big chunk.
But remember, they only recognize about 2% on the Bitcoin revenue. So there's a lot of costs associated with Bitcoin as well. So the actual gross revenue number on Bitcoin is a little bit misleading. The actual proportion of Bitcoin within the revenue build is much smaller. So the contribution for Bitcoin isn't as big. The perception of Bitcoin, I agree with you, Oliver, is extremely important for Square.
Okay, so the 3.84 net revenue, Bitcoin revenue 1.8. So you're saying that in terms of how it moves the needle for the bottom line, it's not much, but it is 1.8 of the 3.8 billion, right? That's the same revenue figure.
Right. But we're looking at the gross profit, right? That's the most important number, right? Okay. You have to look at the gross profit. That's the key number, right? Because the gross profit is, there's 2 key components here, right? And there's the seller ecosystem, and then there's the Cash App ecosystem. What people should be looking at is the gross profit, because that nets out all these other, network fees, Bitcoin costs, et cetera, right? So on a gross basis, I think that's actually an interesting point that you're making. It happens a lot in payments. Some of the other companies are overstating their revenue, but Square is doing the right thing by actually letting you look just at the gross profit, which is the right kind of apples to apples comparison.
Okay, so the miss then versus the street estimate of $4.5 billion on average, where were you at, Dan? Were you also surprised that this number they reported for net revenue was this low?
Right. So I think that's sort of the bifurcation here. We have to look at it on two things, right? The first thing we have to look at is the most important thing, which is the Cash App gross profit. I think it came in at about $512 million. Okay. I think that was a little bit below what people were expecting. So if you think about it on a 2-year CAGR basis, that's reflecting about 104% CAGR versus the second quarter or the third quarter of 2019. That's a slowdown or a dramatic slowdown versus what it was in the second quarter and in the first quarter. And the reason for that is because the stimulus payments are fading, right? And the impact of stimulus is fading. And I think that's what, if there was one thing to be worried about, it's that slowdown in the Cash App growth, because that's kind of the future of Square. That's what everyone is focused about. On the other side, which is the seller ecosystem, which is the point of sale, and I'm seeing on the screen that you're showing that thing has been amazing, right? Gross payment volumes there on a 2-year CAGR basis have actually accelerated, right? So they are actually selling more point of sale. They're getting more merchants. They're winning share from probably some of the incumbents like Global Payments. So I think that business, there's no worry about it. The one concern was the Cash App, but I even think the results are probably, not as good as hope, but better than fear.
So the transaction services revenue, $1.3 billion, people swiping on the Square hardware and devices in stores, merchants, etc. That's up 40% from the year prior. Do you think, Dan, that's a rate that they can maintain? How much of their clientele that use Square transaction services have already gotten back to normal? How much still needs to come back online? Like, what percentage of their user base is back swiping again?
It's a really good point that you're making, because if I go back a few years, and you and I have been talking about Square for several years now, the bear case on Square was that they are sort of on the wrong side of change, that they're too brick and mortar focused, that they're not enough e-com. And what happened during COVID? It showed that they could realign and get their act together pretty quickly and get on the e-com kind of train very quickly. But if you think about the reopening and you're asking about the growth rate of the acceleration in the growth rate, because they're so brick and mortar heavy focused, and because they're in restaurants, they're in retail, et cetera, a lot of it is brick and mortar. I actually think they will see an outsized disproportionate benefit from people coming back to normal. I know you talked about some of those. I saw the segment before when you were talking about the Pelotons of the world. So you're seeing kind of the inverse here, people going out, eating, dining out. They're using more credit. I mean, Square actually talked about it at their press release, right? That the credit, and we've seen that in Visa and MasterCard too, the credit volumes are accelerating, and they're growing much faster now than the debit volumes, right? So it's a sign that things are coming back to normal. That should be good for Square. What that actual acceleration number is going to be, nobody knows. But for now, the trends are moving upwards, and the growth is reaccelerating, and that's a huge positive thing for the company on that seller ecosystem.
Okay, so the seller ecosystem also very important here, and your view of the stock still bullish, $380 price target, right, Dan?
Yeah, and remember, 2022 is going to be an amazing year for them. What's up for 2022? Afterpay integration. Now they're offering a debit card, a Cash App for kids, right? 13 to 17-year-olds. That's a 20 million TAM expansion just in the U.S., right? They're going to do a white paper on TBD, so they're going to be sort of a leader in DeFi, Bitcoin-driven global network of payments. So they're going to basically disintermediate banks globally. So I think there's a lot of exciting things coming up in 2022, which should be the year for Square. And that's why you're seeing the stock trade up today, despite the not-so-good results on the Cash App, because I think the hope of 2022 is way more important today, given where we are in the outlook, than what happened in the third quarter, which is really just a fading of the stimulus payments. Nothing fundamentally wrong with Square.
So what are the opportunities for Square? Well, the Cash App ecosystem is driven by new users and higher average revenue per user. As Square continues to expand its offerings within the Cash App, specifically through Cash App Pay and integrate Afterpay, Square is well positioned to offer a super app that leverages both the Cash App and its seller ecosystem to drive new growth. The strategic imperative for commerce enablement for both the Cash App and the seller ecosystem will drive in-app discovery, which will attract more consumers and provide its sellers better opportunities to discover new customers and drive sales. For the seller ecosystem, Square is prioritizing omni-channel growth, international growth, and moving up market. For Cash App, Square is focused on strengthening its network, driving the new engagement, and attracting more inflows, all while leveraging Afterpay's Buy Now, Pay Later solution when the deal closes towards the beginning of 2022. Square's Cash App also has an ultra-low customer acquisition cost. In one of the recent shareholder letters, they mentioned the acquisition cost for each Cash App user was less than $5. Square is also expanding its Cash App offerings to families by serving teens between 13 and 17 and giving them access to the Cash Card, direct deposits, and cash boosts with all parental approval. There are strong network effects for both the seller ecosystem and Cash App that make the company more valuable over time. And lastly, I like Jack Dorsey's crypto involvement. And lastly, the risks. Well, Square released guidance that non-GAAP operating expenses will increase by 40% next year, not including the effects of the Afterpay transaction. However, this will create more expenses for Square as it will need to improve Afterpay's risk modeling. In order for Square to implement its risk modeling for consumers, instead of implementing its risk modeling for small and medium businesses, it will need to collect more data from consumers to inform its models to more accurately underwrite installment loans using data from the merchants as well. So over time, Square will enforce its risk modeling and take advantage of Afterpay's strong 73% gross profit margins. And lastly, in the short term, Cash App could come a little bit under pressure with the end of the stimulus in the United States as well. Overall, I'm very bullish on Square. I would like to thank everyone for watching this video. I really hope you enjoyed it and that you actually learned something, and see you on the next one.